Hi guys, Ken Chigbo, aka Ken FX Freak, back with another week roundup and look ahead to the key events. Now, you'd seen over the past few weeks now, just bringing up the dollar index here, you can see we've been consolidating for quite some time. We haven't done anything for, some going on 8 weeks, really. And the price action here for the dollar index, very much reminiscent. If you look left, between January to April 2018. Now, why? We're caught between themes. Near-term risks supporting dollar, but then we've got medium-term to long-term outlook for supporting risk appetite, so dollar negative. Now, the near-term risks, i.e., COVID cases are still fairly high in some parts of the world. We've still got economic restrictions. Remember, lockdowns have been toughened up through parts of Europe. We've got supply disruption for vaccine in parts of Europe as well, which is causing, a little bit of a near-term risk. Some flows into safe haven, specifically dollar, and that's obviously disrupting euro as well. But very, very interestingly, we could have been set up for some dollar weakness this week, but something that really helped the dollar as well, surprisingly, coming out of nowhere, kind of was GameStop. Okay, so you can read into this. You may already be aware, but essentially we've just got a battle of sort of the retail market versus hedge funds, institutions. Got these essentially a clan of retail market coming in and forming, what's known as a short squeeze, squeezing out the hedge funds. Hedge funds forced to close out big losses on GameStop, who they're short selling, and other stocks. So that forcing potential liquidation of other assets, other stocks, and it's just uncertainty. So we're getting flows into dollar, bit of safe haven, stock market sold off, so on and so forth. Now, in terms of euro, if you look here, we're caught between a bit of consolidation at the moment. As I say, there's near-term support for euro, near-term risks for euro, but then, i.e. the vaccine being held up, so on and so forth. But over the longer term, risk appetite should carry euro forward, but for the time being, it is being disrupted. I still like gold prices. Look, gold, very much still, remember, we've gone over this flag, had the FOMC rate decision last week. They were dovish. Okay, if not more dovish. They noted employment inflation's nowhere near their targets, nowhere near. So they're going to continue to pump, flood the markets with dollars, keep rates low for a long time. Gold loves that. Remember, gold's an inflationary hedge. So gold thrives when global central banks are being ultra easy with their policy. And particularly, bear in mind as well, we've still got the fiscal stimulus to come from the US government. So that should support gold to the upside. Really, really like gold a lot. And expecting a nice little breakout from this flag structure here, and then just continue to the north back towards that 1900. And I want to see all-time highs. In the coming months for gold. Again, breaching 2000. The only thing that I really like, if we look, a couple of things I like. I like GBP. Okay, GBP has an opportunity to continue to the upside. The vaccine rollout by the UK is impressive in comparison to its peers. They're really pumping out that vaccine. So, in the sort of coming months, they'll be in a great position because lockdowns can come off, reduce these economic restrictions. We can get on and continue our lives as per normal to some extent. So that would support GBP to the upside. We've got the Bank of England rate decision this week. I don't expect them to be dovish. If anything, a little bit more optimistic now because the vaccine's getting rolled out at a decent pace. So I want to see this breaking out from this range and continue to the upside, as with GJ. AUD, worth keeping an eye on. All right, guys, by the way, just looking at dailies here, in terms of specific analysis, trade ideas, daily fundamental and technicals, packed with energy and serious value to you for sure. Check out freakfxtrading.com, okay, by me and the team. You won't want to miss that. A lot of value going out there. Got what we could mark up potentially as a flag structure here, just a bit of consolidating for AUD. This week we've got the RBA rate decision. For me, I'm expecting them to be optimistic, upgrading their, inflation and employment forecast, because both of those have continued to improve. We saw last week Australian CPI picking up. The week before that, the unemployment rate dropping. So they're in a good position to be tightening up policy at some point. Not yet, but before the likes of the FOMC, who are far behind. So AUD upside versus dollar. It's just about getting that timing, and executing for those longs. And NZD, keep an eye on this week as well. We had this flag breakout already. Retest here is subject to breaking out of this range, okay? We've got a lot of resistance, daily resistance around sort of 72.30. You can see where we cap there. Cap. Little fake out there, suck back below. You get the point. If we can break out, retest that area, longs. This week, we've got employment data from New Zealand as well, so keep an eye on that. Other than that, it's NFP week. That's pretty much what I'm on my watch list this week. NZD, AUD, GBP, gold, all of those. Keep an eye. As I say, specific technical fundamental daily analysis. Check out freakfxtrading.com. And guys, with BluFX, an amazing solution to help you become an all-rounded trader. Do not hesitate to check that out. A number of my community are actively BluFX members and are thriving. Stay lit, baby. Let's have an amazing week.